Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
The 13th of December, wonderful for you to join us. How's your day, Juliet?
It's been really good actually for a Wednesday. I had some really interesting conversations. Yeah, and a good day for the market too.
Yeah, it sure was. The COB Australia Index has seen the curtain come down and a positive session there. We do still have the last of the day's trades coming through the S&P ASX 200, but that's a pretty decent performance, up by 0.4%.
Yeah, and really healthcare leading the way today. I know we're going to talk more about this, but it does seem everybody wants a piece of Sigma and Chemist Warehouse potential merger. Energy underperforming, you know, those crude prices falling about 3% overnight.
And a big EIA report that we're watching when it comes to the crude oil market as well. But today we also had the release of the mid-year financial update from the federal government. Lucky country, with the question mark, because there's a lot been made about the fact that, yes, we're seeing the bottom line improve, a lot of which is thanks to the government's really conservative expectations for the iron ore price. So commodities have been flowing into the coffers.
Yeah, so it's that iron ore price which is got that iron will at the moment. It's continuing to defy expectations, ratcheting. It's been about $135 a tonne. But also what's been really interesting, and I spoke to a couple of people earlier this week that were saying, you know, migration is the big story of 2023 if you're going to really put something on that. But the fact that we've had this record migration has continued to underpin our economy. David Sokolsky from Carrara Capital telling me that too. But at the same time, creating these problems like the housing supply shortage as well.
So that interview with David is always good value. It's up online. If you'd like to find it there, you can find his name under our experts and follow him there. And then you get to the miners. At record highs for Fortescue Metals. We saw records, I think, for Rio, for Pilbara. Really interesting, because we had this 2-day economic conference come to an end in China. So we started the day with no hints of any big stimulus coming. But those miners going from strength to strength. I mean, yes, the price of iron ore has defied gravity. But I suppose the question is, for how long? But look, investors driving those higher today.
You know, if you look at the construction going on in China, in Vietnam, and the like, all of those bridges, all of those roads that still need to be built, maybe investors are betting on that too. But Sigma, of course, storming higher. I mean, it rose something like 75% on open. Incredible. This proposed merger with Chemist Warehouse, an $8.8 billion behemoth, and it will actually be one of the most valuable companies on the ASX when it merges. But putting it into context, I think BHP is something like 240 billion, isn't it? So 8.8, a little bit off that.
Yeah, but still in the 200. I had a really good conversation with Lucas Good from Investors Mutual to start the small caps. So find the small caps online and you'll be able to listen to that. They are long-term shareholders in Sigma. They got in hopes that this Chemist Warehouse deal would come to fruition. Back when it was still being held by EBOS, I asked if this was in their investment thesis at all. He said, nope, but we'll take a 70% hike on the day. You know, they're now holding what he calls one of the country's premier retailers. So yeah, really fascinating to see how this is all panning out, backdoor listing. So those are some of the key themes. Now, I put miners as sort of the top sector only because, you know, overall the materials space wasn't the best performers. Healthcare was, as you mentioned, but I mean, you know, like I said, all these records being set here.
That's incredible. I mean, I think still, because I just did a note on iron ore and I'm going to get some of the brokerages mixed up, but I feel like it's Macquarie that has a rating around $19 or something. So to be at $26.69, Fortescue is continuing to defy gravity, as we say. BHP Rio also looking good. Let's have a look at the healthcare stocks. We mentioned what was happening there with Sigma. And I was just talking to Will Riggle and he really likes CSL and ResMed in that space.
Okay, so good day there. Where did we also see some positivity? The REITs, again, we continue to talk about rates, peaking rates. Well, the FOMC meeting's underway, isn't it? So we'll have some results from that come tomorrow morning, that being Thursday. So yeah, the rates conversation continues, and worthwhile mentioning that US inflation read was quite sticky through the overnight. The components of it were sticky, and so yeah, reading plenty of notes today about just not getting too far ahead of ourselves when it comes to this, immaculate disinflation sort of narrative as well.
Yeah, and just to highlight my David Sokolsky interview again, I mean, because NAB was saying that swaps markets say 108 basis point cuts by the Fed in 2024. He was saying, look, that's going way too ahead. We've got to listen to what they say, which is higher for longer. There may not be any more hikes, but, you know, we've got to stay where we are.
Yeah, it's hard to sort of disagree with that, but plenty of analysis if you look on the website about what's likely to come from the Fed, and of course we'll cover it for you in detail tomorrow morning. Corporate stories today. Look, it was a quiet one. Let's just put that out there. Woodside Energy, I sort of had missed this, but it reached an agreement with 3 maritime unions to ensure the employment of around 70 Australian resident seafarers on an LNG carrier. Also, though, in focus because of obviously the M&A possibility with Santos, and as you foreshadowed, oil prices really in focus as well. Then we have those record-hitting companies, of course. Stock of the day was a little bit off piste today.
Well, it was IDP education, in fact.
But tracing back to your story about migration,
yes,
and that debate being
fewer
one of the
students
top,
potentially. Yeah. Let's take a listen.
Even without that sort of most recent news, and we covered this back in September, and I was a bit cautious in September, thankfully, because we're about $4 cheaper than it was then now. But it just shows the danger in investing in any company where, with the stroke of the minister's pen, your business model can change overnight. And that really scares me. We like businesses that have a big moat around them. It's sort of business whereby it's really hard to replicate. Not immune to regulatory change, but it's pretty hard. This unfortunately doesn't fit that criteria. So for the political stuff you just spoke about, from a valuation point of view, I can think of plenty, and the shorting, I can think of plenty of reasons not to be there. So thanks, but
we always talk about investment from the long side of things, but shorters have done extraordinarily well this year.
Yep.
If you were short stocks, specific stocks, you have had a knockout year, probably more so than being long stocks. So so there's obviously validity in that kind of investment strategy, but not for the average retail punter. But this one certainly not for me at the moment.
Let's get to our guest. Carl Rodder from Capital.com joins us for his view on all things macro. Kyle, where to start? I guess just this continued run that we've seen in a lot of the mining players.
Yeah, I mean, kind of the inexplicable surge in the iron ore price, which sort of defies a lot of the story, broadly speaking, around China and its continued weakness and concerns about its economic outlook and obviously investability as well. So I mean, I've heard numerous theories as to why iron ore has outperformed. Apparently stockpiles are relatively low, as I understand. Again, not something that I look into too specifically because our clients don't trade iron ore specifically too much, but clearly a little bit of a tailwind for our market. We've been a major laggard compared to the States, and even indices like Japan's, the DAX, all have been tearing to at least 1 year highs, if not almost record highs for the DAX and the Nikkei. Relatively speaking, the ASX 200 has been fairly subdued, but by virtue of a bit of that uplift that we have seen in iron ore prices and the flow-on benefits to the likes of Rio, BHP and Fortescue, we're at least looking like we'll close at a 3-month high today, and we'll find out obviously in a few minutes' time. So clearly defying a lot of that sort of, I guess, global growth fear, benefiting the market, albeit I suppose we are sort of trailing compared to our global peers overall.
Immaculate disinflation, is that dead and buried? That thesis there, Kyle?
Yeah, I don't know. I sort of looked at the data this morning, and I guess if it weren't for the fact that we didn't have, 4 to 5 rate cuts from the Fed next year, it's 5 to 6 when it comes to, say, the ECB, but 4 to 5 rate cuts from the Fed next year, we wouldn't be looking at this number with such disappointment. I mean, I understand, and again, it's more of an economist question, of course, but as we've all read in the reports this morning, shelter costs not coming down perhaps as quickly as expected, proving perhaps a little stickier than previously thought. But if you look at sort of the headline numbers, they were in line with expectations. The only knock really was that we sort of saw a 0.1% lift in core inflation month over month versus a flat expectation. So, I mean, I think overall it kind of confirms the downtrends. The glide path to target is still there for the Fed. But, when you've got expectations of such aggressive rate cuts next year, clearly everyone's going to be looking for much, much more than just, a sort of steady trend to justify such aggressive pricing. So, nothing to suggest that inflation is overall sticky, but as we'll find out tonight, the overall question is, how I guess, over-enthusiastic, overzealous have markets become on these expectations of cuts from the Fed next year.
Yeah, 108 basis points, as NAB saying, seems aggressive, as you say. What about what we're expecting in our economy? We had MyEFO today. We've got jobs numbers tomorrow. The RBA, again, of course, not meeting again until February.
Yeah, those jobs numbers should be fairly interesting. I mean, I guess, when it comes to looking at the rate outlook, you're basically putting the queue in the rack for the most part for the next sort of 6 or 7 weeks until we get that CPI figure at the end of January, mostly just because so much water can go under the bridge between now and then that no one want to make any kind of bold predictions, especially because we're going to have 2 labour reports or labour force reports between now and the next RBA meeting as well. But the data is expected to show a little bit of softening in the labour market, and that's consistent with what we're seeing in the rest of the world as well, is that although we haven't seen joblessness spike by any means and sort of flash any kind of even amber signals really, there are signs of increasing slack and lower demand for workers, which naturally is symptomatic of a slowing economy and an economy that's starting to see the effects of rate hikes flowing through it. So I mean, we've got that tomorrow. As far as the local economy is concerned, I mean, overall, if you sort of took a sort of slice of time and where we are here and now, clearly inflation's too high. There are some problems emerging on the horizon, but things are still reasonably robust. I guess it raises the question when it comes to RBA policy, whether, when the rest of the world is having priced in rate cuts, whether, the RBA still might have a hike in it, perhaps by virtue of the fact that inflation still remains relatively high compared to the rest of the world, and our cash rate is so much lower than global peers too. But I'm overall looking reasonably solid. The MyEFO, although I didn't look into it again too deeply because it's not something particularly tradable for our clients, did look fairly rosy overall. Maybe the surplus was not there, but by all reasonable assumptions, we'll have an iron ore price that remains above $55-65 or whatever it happens to be, and probably see a modest surplus next year. So everything seems overall reasonably strong, despite the fact, of course, there are as always unknowns on the horizon about the growth outlook next year.
Well, Kyle, what's tradable? Volatility. It's at its lowest level since pre-COVID, the VIX index. But to our earlier conversation, we do have the FOMC tonight. Do you reckon there could be some volatility around the commentary coming from Jerome Powell if he does push back on the market's expectations for, pretty significant interest rate cuts coming through relatively early next year?
Yeah, definitely. I mean, I guess there is a fair argument to say that this event is asymmetric in terms of the risk, just because, I mean, what are the likelihoods that he's going to turn around and justify that kind of perception from the markets and that kind of pricing, when all it would do is obviously feed those expectations and loosen financial conditions and maybe make their job of bringing inflation down, which albeit going in a very positive trend, is still fairly significantly above target. So it's very unlikely that he'll deliver any kind of dovish commentary by any means or justify the pricing in the markets. The interesting thing for me going into this event, this is why I'm a little bit wary of it, is that although that is clearly the case, that it's very, very unlikely that he's going to sort of confirm the pricing that's in the market. Everyone also knows as well on top of that he's unlikely to do it. So what's the kind of bar that we're going to have to kind of meet or exceed here to get any kind of a surprise? I would imagine it's going to have to be something incredibly hawkish to say, you guys are absolutely nuts, we're going to keep this high, we're going to keep it high for the rest of the year, for 2024, and have the dot plots kind of back that up. Any kind of, I think, window of, maybe we could ease next year, I think traders might seize upon that. But again, I think it's an asymmetric risk just by virtue of the fact that clearly markets are priced in so much to the downside for next year without any kind of data impetus yet, and he's not going to say, yes, that's a fact. So hopefully a little bit of volatility. Like you said, it's tradable, and our clients like to trade volatility. That's the name of the game. But it's certainly a significant risk event.
Can you imagine if he said you guys are absolutely nuts? That'd be fabulous.
A moment of clarity.
So maybe he's found a new tone to his discussions.
Yeah, well, remember when he told the climate or the door to be shut on those climate activists? Yes. You never know what's going to come out.
All right, thanks, Kyle. Kyle Rodder from Capital.com. Let's have a look at the leaders and laggards as we close out the session today. I assume Sigma's going to be up there. Nope, Neuron Pharmaceuticals. I don't think that's right, because Sigma, of course, climbed by some 44%.
Well, I guess it could be because Sigma's not yet in the 200. That would be my thinking.
I didn't know that.
Yeah,
there you go. Rookie error.
It will be when Chemist Warehouse is part of it. So Neuron Pharmaceuticals, Polynova again, Star Entertainment being so volatile lately. It's either a laggard or a leader. But yeah, any of these companies, save for Auckland Airport, I suppose, didn't have any big news associated with it that I could see anyways.
Well, I've been schooled in the ASX 200. My bad. No, that's good. Because I was basically saying we'd got it wrong when we didn't. We got it right, as we always do at ausbiz. Chalice Mining up 5.7%. Sayona Mining, Coronado Global Resources coming down today. IDP we touched on, maybe fewer international students next year. And Weebit Nano down 4.2%, which is interesting because we've been watching so much in terms of the tech players in the US.
So here we go. Let's take a look at what's going on in the smaller end of the market. Look, all of those are just sort of a motley crew, as I said before, of these resources. Small, I mean, look at, that's an 11-cent company with Peninsula Energy. Let's get a look at who was lagging the market as well. Iris Metals also very volatile. 4D Medical, I was out with a bit of news, I think in the past couple of days, so perhaps it's giving up. 4DX is the ticker code. I can't get this up quicker. So I think it's just giving back some of the gains it had seen, and Appen down by 12%.
Of course, as we know, what is happening, it is the FOMC interest rate decision. As Kyle mentioned, what are we going to hear in terms of potentially pushback against these aggressive rate cut speculations that markets are pricing in? Producer prices data, mortgage applications, and Adobe comes through with numbers.
Nice to see. All right. We'll get those tomorrow morning and we'll get some analysis with you. I was just talking to Bob Desmond from Claremont Global about Adobe yesterday. If you want to go back and find that one, it was pretty interesting. Unemployment data tomorrow here. That's the headline. I had a chat with Justin Smirk from Westpac yesterday. So hours worked and underemployment. And then don't forget, lots of central banks meeting this week.
Absolutely. And in terms of AGMs, we're going to hear from Elders and Westpac. I spoke to the Elders CEO a couple of weeks ago, and it was really interesting what he was saying about still trying to find talent. So that'll be interesting on a day that we get jobs numbers as well. But that does it for today's COB, and we'll see where the market is tracking. I think a gain of around 1/3% on the ASX 200.
Yep, it looks like it.
A 50-day a 50-day high, I should say. And we are up. Gosh, both our computers are just giving up the ghost. There we are. We're up 1/3%, 23 points on the ASX 200, 7,258, a new 50-day high. The SIBO, they're up 0.4%.
And we do have the BOE meeting today, so we're heading toward that European Open quite quickly. And just ahead of the US Open, interesting to see, we've got S&P 500 E-minis and NASDAQ E-minis. Time stamping this, we're about 4 here in Sydney. For those of you catching up later on. But yeah, looking positive heading into that FOMC meeting. We will see. We'll also watch the Aussie dollar. It did come under a lot of pressure through the overnight period. So, lots of opportunities for volatility tonight. We'll be discussing it all tomorrow morning.
We will. We'll see you then.